So my name is Ben Beaton and I am the co-manager for DGI9 and I'm also the co-managing partner of TriplePoint. Now, Digital 9 Infrastructure PLC is a FTSE 250 listed investment trust. It's quite a young investment trust, having been IPO'd in March 2021. So it's only 2 years old and it's raised about £900 million of equity. And D9 invests in the backbone of the internet. Indeed, it gets its name from the UN Sustainable Development Goal number 9, and D9 focuses on decarbonising digital infrastructure and reducing the digital divide. We invest across 4 subsectors of digital infrastructure: subsea fibre, data centres, wireless assets, and fibre to the home. And D9 looks to generate a 10% total shareholder return per annum and pay a 6p dividend. Over the course of last year, we invested just over £760 million and we welcomed 5 new companies into the portfolio. Briefly, those were Verne London and Verne Finland, Elio Networks, Giggle and Arqiva. And D9 is now fully invested. And it's fully invested across a portfolio of 9 high-quality businesses, diversified across 4 different sectors, across multiple geographies, so the UK, Ireland, Finland, Iceland. We have subsea cables running from the US to Europe and out to Asia. And the companies are underpinned by strong currency diversification. So over 99% of the customers pay in either pounds, euros or dollars. We have an extremely strong customer base within the portfolio. So some of our key counterparties, some of our key customers include the BBC, ITV, Channel 4, the Discovery Channel, Sky, the very large tech companies and the very large telcos. And 66% of our revenues are linked to inflation, with over 50% of them directly linked to either RPI or CPI. So just 3 of the businesses to briefly pause on. The first is Aquacomms, which is a submarine fibre business that runs cables from North America over to Europe. And we're working on a new cable that runs from Europe to India. Aquacomms operates over 32,000 kilometres of subsea fibre and connects more than 3 billion people around the planet to the internet. The second is Verne Global, which is our data centre platform, and it operates data centres in 3 locations, so in Iceland, in Finland and London. We have 49 megawatts worth of capacity either in operation or in construction, and we have the ability to grow that 4-fold up to 195 megawatts over the coming years. And finally, Arqiva, which is the undisputed leader in UK TV and radio broadcast, operating more than 1,400 transmission sites across the UK and reaching more than 98.5% of the UK population. We're really pleased with how the trust has performed and the annual results that we published in early March. We have shown a NAV increase of 5 pence per share, increasing the NAV to 109.76, and that is despite paying out a largely uncovered 6p dividend during the period. So in total for 2023, the trust delivered a total shareholder return of 10.4%, which is marginally above our target of 10%. We aim to take a big step forwards in terms of disclosure and transparency in our annual results, and we included a very clear bridge setting out dividend cover from EBITDA through to net adjusted operating cash flow. And that is because there doesn't seem to be a market norm for how dividend cover is reported. Now, we have assembled a portfolio of companies that we're confident can cover the dividend for D9. Currently, we're showing dividend cover of 0.4 times. And there are 3 key drivers within the existing portfolio that will increase that dividend cover number over the coming 6 to 12 months. The first is within our data center platform. So Verne Global has pre-sold existing capacity to a range of different customers who will over time ramp up their usage of that capacity. About a third of that additional income will come through by the end of this year, and a further 2/3 by the end of next year. And once fully ramped, the dividend cover will increase by about 40%, by about 0.4 times. The second principal driver behind dividend cover is one of our submarine cables. We have been constructing a cable that runs from Europe to India. It's called EMIC-1. And we have set aside all of the CAPEX required for that cable. It's not dependent on us raising additional money. That cable will complete in the middle of next year, and in the second half of next year, we expect very substantial operating cash flows, which again will contribute another further 0.4 times or 40% of the dividend. And the third principal driver relates to inflation. Our investment in Arqiva benefits hugely from times of high inflation. That's because a significant proportion of their revenue streams are linked to RPI and CPI. And we've seen that play through in the valuation this year. Our valuation of our Arqiva investment went up by about £55 million. But in the short run, times of high inflation have a negative impact on the operating cash flow that we can expect from Arqiva. And that is because of some inflation-linked swaps that they have held for the last 10 to 15 years. Those swaps expire in 2027. But as we see inflation falling over the coming year, we expect to see a material improvement in the operating cash flow from Arqiva. And we included some sensitivity that says if inflation were to fall to about 5% by next year, again, we would see a further 0.4 or 40% dividend cover contributed from operating cash flow. So those three main areas, the Verne ramp up, the completion of EMIC-1, and a falling inflationary environment, will contribute significantly towards fully covering our 6p dividend. In January, we put out a trading statement to the market, setting out that following the completion of our portfolio company's 5-year business plans, we had seen a very significant increase in the CAPEX opportunity for some of our businesses, and that's driven by the success that they have had with their customers. And in that update, we referenced the fact that D9 is fully invested and is unable to access additional equity at this moment, whilst the markets remain shut. And so we described that we were exploring two complementary forms of capital, both a portfolio level debt raise and a potential syndication of a minority stake. Now, on the debt front, we have made significant progress over the last few months, and we have a term sheet agreed with a bank for a $100 million facility with one of our high growth portfolio companies. Up to 50% of that facility will be used to repay a shareholder loan to D9, and D9 in turn can use the proceeds of that to pay down part of its revolving credit facility, its RCF. We're making good progress with that debt. The terms are still quite commercially sensitive, but we're committed to updating the market as soon as we can. On the syndication front, we described three main benefits of a syndication in January, being that selling a minority stake in a portfolio company or companies helps demonstrate its market value, which we believe is a confidence building step. Secondly, selling minority stake would give D9 very significant cash proceeds, which again it can use to either delever by paying down part of its RCF, or putting towards growth CAPEX or other OPEX opportunities. And thirdly, and most importantly, by syndicating a minority stake to a strategic capital partner, we're able to share the future CAPEX requirements of that business with another partner, with another party. And that means that the companies are more likely and more able to execute on their highly ambitious 5-year business plans at this time when D9 doesn't have access to fresh equity. So again, we've made significant progress on that front. Since the end of January, we've been working with the TMT team at a leading investment bank who will run a competitive process, and we expect to complete that transaction during the summer. So the digital infrastructure team is headed up by my colleague Arnaud Jaguin, who joined Triple Point 2 years ago when we first IPO'd Digital 9. Arno has some 17 or 18 years industry experience, and he hand-selected and picked and recruited the rest of the investment team at Triple Point of associates and analysts. Now, Arno and the investment team are supported by a panel of operating partners who are industry experts, have been in industry for some 30 or 40 years at businesses like BT and Vodafone. And in addition to the operating partners, each of our portfolio companies has their own world-class management teams and operational teams and boards of directors who are focused on executing their business plans day in, day out. Now, in addition, we are committed to hiring a new head of digital infrastructure into Triple Point. We've met a number of very high quality and promising candidates, and we will be making an announcement to the market about that appointment in Q2 of this year. So, in summary, we think we have a great portfolio of assets run by brilliant management teams operating in a sector and sectors that are experiencing significant tailwinds right now. And I would urge anyone who wants to find out more about the portfolio companies to go and watch the recording of our Capital Markets Day, which is on the D9 website. The key challenge for D9 as we see it at the moment is access to capital at this moment in time when the markets are shut. But we believe that we've made very strong progress in terms of ramping up dividend cover and raising 2 forms of alternative complementary capital, which can help support the portfolio companies during this period.